Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, August 9th. I hope all you guys had a nice, relaxing weekend, got your batteries recharged a little bit and ready to hit it hard this morning. Okay, taking a quick look at markets. Large caps are down about 0.2. The NASDAQ's flat. Small caps are down about 0.5%. Commodities are really getting whacked. Oil's down 4%. Copper's down 1.5%. Gold is down 1%. But last night there was a flash crash that sent gold down like 4%. We had Japan and Singapore were closed yesterday, so that ultra low liquidity probably had something to do with that. So gold's recovering a little bit, but it got whacked on Friday as well. So it has really fallen apart the last few days. Taking a look at macro for the week. Today we've got JOLTS and we've got Bostic and Barkin talking from the FOMC. Tomorrow we've got NFIB Optimism Index. We've got productivity and costs, and Charles Evans is speaking in the afternoon. Wednesday will be an important day. We've got the CPI print. We've also got the Atlanta Fed Inflation Index, along with the oil inventories. And again, Wednesday afternoon, we've got a couple of Fed speakers, and we've also got a 10-year bond auction. Thursday, of course, is jobless claims. Then we've got a PPI final print, along with a 30-year bond auction, so that'll be closely watched. And then Friday, we've got consumer sentiment and import-export prices. So I really think right now the market is trying to digest that strong jobs number on Friday and trying to figure out where rates are heading. And also that sector rotation, I think, is going to be front and center for us. But before we dive into the charts, I wanted to share a little something with you. I was watching a documentary on mountain climbing, specifically Mount Everest, over the weekend. And there was a quote in there that I thought was not profound, but might be helpful to us as traders. And this is coming from a guide that has lots of experience climbing Mount Everest, has taken numerous expeditions up to the top and back. And so this is a quote from him as best I can. I went back and took some notes, so it's not verbatim, but it's pretty darn close. Anyone who makes it to the base of Mount Everest has the technical ability to reach the summit. But it won't be until the final day, after fatigue and oxygen starvation have kicked in, will I find out if they have the fortitude, determination, and courage to make it to the top. And so I think it's the same way for us as traders. I have no doubt that anybody spending the time to listen to this video that's willing to do the work has the capability of being a very competent and good trader. It's all about your mind, conquering yourself. It's not about finding a secret indicator or a secret process. It's all about mastering yourself, not mastering the markets, because there's a million ways to make money in this market. I know guys that use, a number of technical indicators, and I know other people that don't use any, and they both do fine. So it's not about the secret formula. It's finding something you're comfortable with, that you trust, that resonates with you, and then sticking with it and mastering it over time. And so I think one of the things that I'd like you to do is the next time you're in Walmart or a department store, get yourself a little makeup mirror, something that can fit on your desktop. And when you doubt yourself, when you have a hard day, look in that mirror to remind yourself that you have the capability. It's all about you. It's not about the market or anything else. It's about you. And if you internalize that and, make that your own, I think you're going to do fine in the marketplace. And I use that as a little trick myself, because we all have doubts and fears, right? But we all have that innate ability to be able to make progress and get to where we're going. It all boils, like the guy says, it all boils down to fortitude, determination, and courage to win and succeed. So kind of let those be your guideposts going forward. And I have no doubt that you'll find success. So, okay, let's get into the charts. We got a lot to go, and we've already burned 6 minutes. So let's find out where we're at. I think all this week is going to be about bond yields and sector rotation to see if they emerge or if they don't. So here's where we were at Thursday. We had the big question mark. What would the jobs print do? And we've got this breakout working where rates went from like 1.12, I think was the low last week, all the way up to 1.3%. So now we've got technical resistance at 1.3 with a breakout sending it up towards 1.4%. Maybe there'll be a little bit of a resistance band here with this downtrend channel line. But in general, above 1.3, you'd be looking for 1.4. But there's also the chance that this gets rejected and sent back down. So with that move on Friday, we got our sell signal on TLT with a break below the uptrend line and this 148 level. Keep in mind that we've got the 200 EMA and the 50 EMA coming in right here at, let's call it 146. So, and the reason all this is important is because we've got basically two regimes that we've been keying off of. Number one, a rising TLT tends to favor the high valuation names, the ARC names, and the bubble names, because that means falling yields. And if you didn't see it over the weekend, I did a little technical study on all the ARC names. So if you haven't seen that, look on the YouTube channel. It's about a 25-minute video, but it gives you the levels to alarm on the ARC stocks. So you'll have some actionable trade ideas if these rates have a major impact on these high valuation names. But then a falling TLT favors cyclicals and banks. So we're right here on the edge. And I pulled up this KBW banking index versus SPX. So it's one divided by the other. And you can see that from October, November, when we had the rising rate environment, steady, not without corrections, but steady rise. And then since we've had falling rates starting in June, this index has been under pressure and banks have been underperforming. But look what's happened in the last week. We've got a breakout of the ratio, which means the banking sector is outperforming the broader markets. We've got to turn higher in PPO, and we've got to break above 50 on RSI. So this is showing strength in the banks. And we've been watching our cyclical sector ETFs. And that, just as a reminder, that's materials, XLB, energy, XLE, financials, XLF, and industrials, XLI. Now we've got 2 of the 4 breaking out. The first one was materials, and now we got financials on the breakout on Friday. So if you're in that trade, actually you gotta, actually there was a little bit of a breakout on Thursday with the jobless claims number, and then there was follow through on Friday with XLF. Now note here that there's a little gap to fill below, but the point is this: now we've got materials and financials breaking out. You're not going to see energy break out today with oil down 4%. And we haven't gotten a breakout yet in industrials either. So we've got 2 of the 4. And that, the sector rotation theme is building. It's emerging, but we're not all the way there yet, in my opinion. Here's a chart of the US dollar. We had been watching this thing and wondering if it was going to roll over and head down. Well, the higher rates are giving rise to the dollar. So if this thing goes higher, it's going to be very hard for, I wouldn't be surprised if materials has trouble in that environment. Certainly the commodities, copper, gold, oil will have trouble in a rising dollar environment. So the secular rotation theme might be a little choppy, because if we've got materials and all that rolling over, and also I gotta say the Delta variant demand drumbeat keeps going on, raising questions about consumer demand going forward. Now, I think you fade that fear, but it is weighing on the market. So also I wanted to point out that a strong dollar is generally regarded as a wrecking ball for emerging market stocks. So I've pulled up the chart here of EEM, and you can see that price is sitting right here on an important technical level. This 51.5 was support here, 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 and most recently right here, and we've got the 200 there as well. So I think it would be a good idea to set yourself an alarm there at 51.50 if you're even remotely interested in trading EEM. I think if you see a break of 51.50, you probably get a quick move down to 50 right here. You've got a little, it's not much of a ledge, but there is a little level there at 50. But you get a break below 50, you've got a big void in volume over price. And I think you could find 47 if the dollar really takes off. If rates continue to rise and the dollar finds strength, that's going to be a stiff headwind for EEM. So be aware of that. Also be aware that the emerging market ETF was reconstituted, and it has a lot of Chinese stocks in it. So before you go off with your bazooka on EEM, make sure you go to the website and find out just exactly what the weightings are. I mean, know what you own is always a good adage, just so you make sure that, I think China is almost 25% of this ETF, so that would be a good thing to at least understand. We saw a little improvement in breadth last week. We've got, we were trapped down here in the 40s for quite a while. Now we're up to 50%, and that shows that more participation is happening in the broader markets than just our FATMAAN names, as it were. So that's a good sign of a cyclical rotation, because more stocks under the surface are starting to perform. So we'll want to keep an eye on that. I haven't included the charts, but I have been watching the oscillators, NIMO and NAMO. They're right smack dab in the middle of the range, so they're not going to be really helpful here as far as actionable information goes. So just watching the breadth here. Moving on to the indexes. SPY 2 hour. We're up here in the upper half of this rising channel. I think as long as we stay above 441.75, I mean, there's really nothing to get too worried about. If we were to break down below 441.75, could move down into this 440 area at the midpoint of the channel. I think at that point, anything, as long as it stays in the upper half of this channel, I think you can not really be nervous. I think that's fine. You get a break below the midpoint, then that opens up the door to a possible test of the low side of the channel. And if you look back over the last several weeks, notice that the midpoint of this channel has done a pretty nice job of containing price, except for that we had one bad day or a couple bad days where we came down and dropped down below, and it was bought right back up, and now we're in the upper part of the channel. So my antenna would go up a little higher if we were to lose like 440 here at the midpoint of the channel and open up that lower part of that rising trend. And here's a zoomed in look with the 30-minute chart. We had this trading range. We broke out, and now we're hovering above that 441.75. And I think as long as we stay above that, everything remains as it was, which is bullish. You drop back in, you could come in here to this 440.50, and you see all the associated levels with that. But a breakout is a breakout, so you got to respect it for what it is. The rising rate environment from Thursday and Friday put a little damper on QQQ, and this is something that we're going to have to watch really, really closely. Why? Because if there's a big rotation out of tech and into the cyclical parts of the market, the Qs could have difficulty. Now, here on the chart, you can see we've dropped below this little trend line that I had, but in general, we're still near the top. I think as long as it holds 367, we're going to be in good shape. But if we drop below 367, you can see that we could come down here to 365 in a heartbeat. Once we break that level. Let me show it to you on the 30-minute. Yeah, here you can see it a lot more clearly. 367, I think, is the pivot. If we stay above that, bulls are fine. Break above 368.50 opens the door to recapture this channel. And if we drop below, we come down here to 365.50, etc. Now, here's the key, and I want to try and make a point here. We know that FATMAAN, Facebook, Apple, all that stuff, is about 40% of the Qs. And so, as FATMAAN goes, so goes the Qs. Now, when we talk about the secular rotation into cyclicals and a rising rate environment being a headwind for tech, generally speaking, that's true. But I think the FATMAAN names, not including Tesla, the other ones, FAANG, Facebook, Apple, Amazon, Microsoft, Google, I think in a lot of respects are defensive names. So while there may be a rotation to cyclicals, broadly speaking, that may not be the case for large cap mega large cap tech. So if people do not abandon those mega cap names, there's a good chance that the Qs could hold its own during this period of time when rates are adjusting. Now, if they start selling off FAANG, we're going to see that. And we're going to have to react to that because we've been hanging out in FAANG for several months and participated in a really, really nice up move. Don't get married to it is all I'm saying. I'm hopeful that the mega cap tech names will be able to hold their own in a rising rate environment, but that's not a given. So we're going to have to keep our antenna up and watch really closely going forward to see if, for instance, people could pile out of the ARC names, the super high valuation names, and put even more money to work in the safe FAANG names. So it could work in FAANG's favor. So we're going to have to watch really closely. IWM. This thing has been a mess. I mean, if you're a sharp trader, been getting some wild moves. Basically range bound between 224 and 218. We've had multiple trips from the bottom to the top. We closed the jobs print spiked IWM Friday on the first bar, but then they faded it and went flat. Today we're down about $1.25 in the pre-market. I think the key right here is this 50. I think as long as this level 222.25 holds, I think the bulls can make a case or stay long and try and get this breakout here at 224. But before that, we may come back down and test the bottom of this range again. So got to stay nimble on IWM. It has not fully committed to breaking out yet. And if you're not really comfortable trying to trade inside this range, I would just wait for a confirmed breakout above 224 and then get long and try and go for this 233 up at the top of the bigger range. So don't get chopped to pieces in here. And I would key off of this 50 if you're going to actively trade inside the range. And here you see that range here between 218 and 224. Here was the fake breakout hovering near the top. And now we're down about $1 in the pre-market down to 222. So use these levels as your guide if you're going to actively trade it. If you're new here, thanks for spending some time with me. I hope you're finding the commentary and the levels helpful. If so, please hit the subscribe button and the alarm bell. Be glad to have you be part of the team. If you want to take the next step, jump over in the show notes. There's a place, a link to the blog where you can drop in your email and get all my additional content morning, noon, and night sent right to your email box. And you also get an invitation to our trading room online where you'll find a lot of motivated, helpful traders sharing ideas, comments, and observations on the market. Be glad to have you there. And join us. And longtime viewers and friends of the channel, I really appreciate it. I really appreciate the lift you've been giving me, getting my name and links out to social media. Got a lot of new members lately, and I really appreciate it. And I'm going to continue working hard to make this a value-added channel for those watching, and make it be a good use of your time. So let's look at FATMAAN now. Facebook has made its gap entry here. This was a gap down on earnings. We've come back. Now we're inside the gap with an open door up to 368 and hopefully up to 373. So right now, it's just about holding the gap. Can it hold 362 and make some progress? So I think the bottom of the gap at 362 is your pivot. It's just that simple. And if it can hold 362, I think your first target is 368 and your second target is 373. Apple was sluggish on Friday. We lost this 146.50. I was forced to close my short-term long here, and so we came back down to this 145.50 and had a good, decent final hour of trading into Friday's close, but it really, from a technical standpoint, really didn't make a difference. I think it's got to recapture this 146.50 to get long, or come down here to 145.50, where there would be a decision point to be made. Either you can get long there and look for a move higher at support, or if it breaks down, I think it'll roll down to this 144 level. So Apple's been a little sluggish lately. Tesla disappointed a lot of people last week. We had the big impulsive move, and it made several. You can see all the runs it made at 720, and that it just proved to be too much. We've got, I mean, there must be at least 5 or 6 or 7 candles that tried to break through 720, and eventually they all got turned away. And now price is back here at 695 with this little gap to fill down to 690. So the top of your gap is a level, and then the bottom of your gap is a level here at 690 as well. So we're kind of at an important juncture, because you don't want to see price lose this big up, this nice progress that it's made here, because a break back below trend would make all this look like it was a fake breakout, right? And then you come back down below, and that opens the door to lower prices. So holding this, I mean, I think it's fine if it comes in here and holds fills the gap and holds 690. I wouldn't get too freaked out about that. But you lose 690, then you got 670 in the crosshairs, and I wouldn't want you to sit and just watch that happen. So make sure you know where your stop is on Tesla. Microsoft, real interesting day on Friday. This is Thursday's action, where it made a run up to the prior high at 290 and got stuck there. And then on Friday, you'll recall that the tech had a hard time, and Microsoft had come down, really spent all day doing absolutely nothing. I mean, the candles were like, the 5-minute candles were like pinpricks. Nothing happening at all. And then going into the final hour, they bought it up and went right back up to close the day almost unchanged. So here we are knocking at the door of a breakout on Microsoft. So I think 290 is your pivot. And remember, this is going to be blue sky up here. So a breakout above 290, all-time highs you got to buy. So if it does that, you can buy that against 290 with a stop just below, and see where they might want to take this. But that was a really encouraging bar. I was getting a little bit, not disgusted, but frustrated that it just, wasn't even moving. But that's Friday afternoons in the summer for you. Nothing more than that. But for whatever reason, they bought it into the close, and that was kind of encouraging. Amazon made a couple tries into the gap last week, got turned away. So now we're down here at this 33.40. I don't think you can do anything with it here. I think you've either got to wait for a back test of this 3,300 and then try a long there and see if you can get a move back up to this gap, or wait for the price to come back up above 33.75 back into the gap, and then you've got the bigger opportunity for a gap fill here. So make sure you just don't get trapped here in the middle. I'd wait until you're either at one side or the other of this box, and then you've got a much more objective level to shoot against. Google just oscillating here on 27.15. No real changes to talk about here at the midpoint of this box. So I think north of 27.15 you can be long, looking for 27.60, or if it breaks down, you probably roll down here to 26.80. You're welcome to actively trade any of these stocks at any time at your discretion, but Google has been one of the stronger stocks and probably therefore one of the more difficult ones to try even a tactical short. This may be interesting here on a gap fill. Now, if you got a break below 26.80, you could see this 26.40 getting filled. But, just up here, look for long entries. Look for either a pullback into 26.80 where you could get long with a stop just below. Or if you see some strength early on, you can get long with a stop just below 27.15 and look for a move up to 27.60. Like I said, I think we're going to find out real soon if these FAANG names are going to be able to hold their own or even drive higher, or if they're going to sell off. So I think we're coming up to an important juncture in all of these names. So I would stay on your toes for these mega cap names. Netflix made a nice run off of this 508. I was not expecting that, and it came up, actually broke above this 522, but wasn't able to hold it. So I think 522.50 is your pivot. Above that level, you can look for 532.5, and while it's below, it may fall back to 515. So I think the levels are continue to work well on Netflix. And then SMH had kind of a soggy day on Friday. I'd like to see it hold this 267.50 and make a push back up towards the low 270s. I did look pre-market. It was up a little bit. So that's an encouraging sign, especially when a lot of the other stuff was red. So I think keying off this 267.50 will be your pivot for today. And then wrapping up, we've got our AMD. As I mentioned last week, if it were to fall out of this channel, I would be out. So I am out now. But what I've done, and this has got all the colors of the rainbow here just about, so I hope you can decipher it. We've got the breakout, and then I put the Fibonacci in this lighter blue color just to show you that we've had a 38% pullback of the advance. And so that is a location where we might see a bounce, or if it rolls down further back into this 106.84 would be your, what I call the half back long entry. You make an advance, you give half of it back, it finds support, and then it goes. Now I looked pre-market, looked like it was up over $1. So if you're interested in trading that, trade small because you're getting outsized moves, and so you don't go crazy on it. But if it were to break above 112 here and take out this downtrend line, then you've got an open door up to 117. It looks like, and of course that would be a great move to capture. So I see 112 as being a resistance level on the upside, and then I see 110 as being important support to hold on the downside. Between 110 and 112, probably going to be choppy. So I would wait for a break either above or below the range. So, okay, a lot there to digest. I hope you found the information helpful. Let's watch the rates today. Let's watch and see how these cyclicals react. Remember, our cyclical sectors that we're watching are materials, financials, industrials, and energy. And if you want to go the extra mile, remember, in consumer discretionary, there's a lot of reopening sectors. We've got leisure and travel. We've got hotels would be in there. If you wanted to drill down into industrials, we've got airlines in there. That's going to be a cyclical sector to watch. So the key, I think, for me is not getting sucked into a head fake. If rates are going to rise into the fall, we're going to have plenty of time to pick our spots to participate in that trade of a rotation towards cyclicals. I just don't want to get trapped trying to be the first guy in and then getting run over with a quick reversal or a head fake. So I think once we see those trends emerge, see if the banks can stay on the right path, see if regional banks, that KRE is another great one to watch. The regional banking ETF is a good one to watch. And like I said, I think we're going to have plenty of time to pull the trigger on some cyclical sectors once we are comfortable thinking that the rise in rates is for real and sustainable. So hope you guys have a really good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.